G'day everyone, I hope you're all doing well. So I thought I'd start the week with another trading update. So today is a public holiday in Australia, so I haven't been able to actually trade on the ASX, which is a little bit annoying because that normally gives me a bit of a gauge for potentially what can happen at the start of markets in other economies. I always find like the last maybe 15-20 minutes, even an hour on the ASX can be quite telling for what's coming, definitely in Europe and potentially also in America. Just like the start of the ASX trading day has a lot to do with what happened at the end of the American day, just given the time zone things. I haven't been trading actually at all this year on it, but I used to do a bit of trading on the German DAX. My idea was that I could have 3 stock markets that are just trading one after the other. But right now I just really focus on the ASX and what's going on in America. So just talk about that. So in the Asian time zone at the moment, the Nikkei and Hang Seng are both up, which is, I think it's actually probably a bit more of a tailwind of what happened in America on Friday. So yeah, most of the markets here tend to see what happens in America before they react to Monday morning, getting a bit of reaction to Friday. So it'd be interesting to see what's going on this week as usual. So I thought I might talk a little bit about my 2 stocks that I've been talking about a little bit on this channel now that I'm going to be watching this week. Again, of course, it's being Workhorse and Wish. And also wanted to just give you a little bit more of a talk about some of the stuff around inflation I have been digging into, as I said I would. So looking at Workhorse, it's still the second most shorted stock in America right now at about 40%. Pubmatic or PUBM is the most shorted at 55%. It's a much smaller company, Pubmatic, but it seems like a lot of the short interest numerically is definitely in with Workhorse. So while it's probably not the most reliable indicator for what might happen, so if you actually do a word search or a ticker name search on the Wall Street Bets Reddit chat, you can actually break down how often a stock ticker has been mentioned, and in the last few hours Workhorse is actually ranked at number 2 in that search, and that was even ahead of the likes of AMC. I think Clean Energy was the one that was above it. So not that that's an indicator for how things are going, but it might be an indicator for how the Wall Street Bets crowd is looking this week. But, I'm kind of with them on this one. I think we should be taking this one up to the moon. So let's do that. Also, anyway, but like I detailed earlier this weekend why I'm still long on Workhorse, and the reasons were to do with that they're still on schedule with their production capacity and they are receiving orders. Okay, so they were quite positive signs for me. Also, they are actively involved in sponsoring an MLS team in Cincinnati FC at the moment. So that's kind of like a sign that things are going quite well for the company. And also, it's a bit more of a long shot, but there's still prospect that Workhorse may still end up with some of the contract of that US Postal Service contract, because it's only been awarded on the design principle, and it was a little bit dubious how that was awarded. It's been kind of kept secret, so I think there potentially could be something still there for Workhorse. It's a long shot, but it's any whiff of that would be good, because I think Workhorse really suffered this year because people thought the company was purely pinned to getting some of this contract, and a lot of people thought they would, and there was even a class action that got started against Workhorse for potentially sort of making it out that they were going to get some of this contract. Now that's all up in the air, and I don't really know how it is, but all this time that I've been following Workhorse, they had been making sales, and so I still think the company's a going concern. So I'm pretty happy to keep pushing Workhorse, and I think it really is like an opportunity to get a decent company with a good potential future. So let's hope that can keep pushing forward. So the other stock that I'm looking at this week, carrying on from my trading last week, is Wish. Now I've got a position in Wish, not a huge one, but I've put about, it's decent size anyway. I've got about $10,000 in Wish stock at the moment, and I literally jumped in that last week hoping to catch a bit of the volatility, just day trade it for a bit of money, but I spent a bit of time this week doing a little bit more research into it, just to give myself a bit of bit deeper understanding of what's been going on. And Wish, they're in a bit of a transition stage with where the company is, it seems. So they've kind of had a bit of a stagnation in terms of the growth of active users on the platform, and that's kind of been overshadowed by the fact that the spending that the business is doing on advertising and sales, the cost there has been growing, but their customer base has not. So that's something that's probably causing a bit of concern for investors in the business. However, if you do look a little bit deeper, that they have been having quite a bit of success with the logistics element of the business that they're trying to build out at the moment. And I think if you give the company a few months into the future, this could be where you start to see a bit of a catalyst for their financial fortunes to turn around. So I don't think Wish is down and out, but I think we have to kind of wait and see what's going on with this, with the logistics. Is it going to help them unlock further financial growth, which potentially can be. The company's still relatively young. They're still trying to build out their business model, I suppose. And they're obviously trying to pivot at this moment to try and but to improve how they've been performing. So for this reason, I'm kind of keen to, I'll be doing a bit more digging into it, but I'm kind of keen to try and start accruing the stock a little bit, just to, potentially take advantage of any squeeze that may happen. There's like big money to be made there, but that's not the only reason. But the reality is, if I'm accruing this, and this turns out to be like a company that just blows up like some of the online stores, like I'm not saying it's going to be like Amazon or anything like that, but there's potential here to multiply 5-10 times quite easily. So I'm pretty keen to keep working on accruing this stock this week. So that's going to be my strategy approaching Wish, I think. And finally, that last topic I'm going to talk about in this video is just a bit of stuff around inflation. So last week I was paying close attention to the CPI release from the US Federal Reserve, and the inflation keeps beating the expectations that analysts are putting out for it. So what's this mean longer term? So I've been doing a bit of digging, and I've kind of looked at three sort of prominent, well-known people in the investing world recently, just what their thoughts on it have been. And so I thought I'd just rail them off. And it's interesting, they all kind of have slightly different takes on it. So I'll start with Ark Investment's Cathie Wood. So Cathie Wood seems to think that the inflation we're experiencing now, while being a bit higher than expected, is transitory. And she pointed to the fact that some of the high commodity prices have corrected themselves since then, and that's true. They did shoot up and they have kind of dropped down a bit, but they're still higher than they had been for a while. Like the one she particularly referred to was nickel, but other commodities that I keep an eye on, like your iron ore and your gold and stuff like that, are performing. Iron ore is going really well, but gold is sort of behaving uncharacteristically, which might be just the market trying to correct itself. So she thinks it's transitory. Another voice, which is quite worth looking at here, is Warren Buffett. And he sort of announced that he is quite concerned with the level of inflation that is probably going to come in the pipeline. He mentioned that at Berkshire Hathaway's annual shareholder meeting a few months back, and that's quite interesting. The fact that about a year before that, he took up a position in Barrick Gold, not him personally, but people within Berkshire Hathaway did, and that was kind of seen as them perhaps putting it on an early hedge against the inflation that they foresaw coming with all the quantitative easing that had been going on in America. And I think even though they've sold about 50% of that position, I think sold 43% of the position off already. I think they're planning on holding it as just some sort of hedge against inflation, just to give them that bit of diversification. But looking at Berkshire Hathaway's share portfolio, it's just so huge. Like that gold investment is literally like a drop in the ocean for what that business is actually worth. So it's big. It was about $500 million when they invested in it. In the scheme of things for Berkshire Hathaway, it's not that big at all. And the final person I sort of looked into a little bit was Peter Schiff. Peter Schiff, I don't know if he's related to that classic American money family, the Schiffs, but he, he's also a fund manager, and he kind of thinks that inflation, there's a lot more of it to come in the pipeline, and he believes that the markets aren't behaving correctly. So Peter Schiff has a bit more of a doom and gloom approach to it. He believes that governments are going to actually be helpless to do much to combat inflation in the future, because interest rates are already at really low, basically record low points in many major economies, including the US and Australia. So he believes that if they were to start increasing the interest rate, they're going to actually just further contribute to the inflationary problem and just hurt businesses. So he actually he can't foresee what's going to happen longer term. So it's interesting. So I guess like what it comes down to, are you betting on the inflation being just a temporary thing, a transitory thing, as Cathie Wood seems to think it is, and a lot of other people are? Or do you kind of think you're going to get that longer term inflation? Anyway, I've kind of decided that one of the things I'm going to do, this is coming towards the end of the financial year in Australia, is I'm going to actually be putting my excess cash into maxing out my superannuation contribution, which is a bit like an American 401k. I know there's a lot of American people watching this, and the reason for that is because of through the tax deductions, I'm going to actually be about, I think, 16% better off than putting it. So that's a pretty good return, I think. But the trade-off is that I can't touch that money till I'm 65. So anyway, that's the sort of plan I'm going to have, and I'll talk about that a little bit later on in another video. I think it's probably worth talking about the use of, taking advantage of tax strategies to maximize your returns, or not maximizing your returns, but getting as much of your money back as you can. Anyway, that's about all I'm going to talk about. I hope things go well for you guys on the trading markets. We're wishing that for Workhorse to go to the moon. But yeah, have a good week. I will catch you later. See ya.